Welcome back. Real estate is this year's biggest laggard among the S&P 500 sectors. It's only about 0.5%. Diana Olick taking a look in this week's property play at what lies ahead for commercial real estate in 2026. Any relief, Diana?
Well, unfortunately, Sarah, CRE leaders are slightly less optimistic than they were ahead of 2025. That, according to a Deloitte survey, 83% of respondents said they expect their revenues to improve by the end of 2026. That's compared with 88% last year. Fewer respondents said they plan to increase spending, while more expect to keep spending flat. 68% said they anticipate higher expenses overall next year. Sentiment is down from last year, but well above that of 2023. Okay, so let's drill down on specific sectors, starting with office, which seems to have bottomed. Vacancy rates are expected to drop below 18% as more tenants return to the market. That, according to Colliers. There will continue to be a flight to quality as Class A buildings in many markets are now almost fully occupied. Office construction is also at its lowest level in over 3 decades, according to Yardi. Now, in multifamily, rents are starting to ease as a record level of new supply continues to make it through the pipeline. Multifamily has led investment sales volume since 2015, and there are no signs of this changing, but its share of total volume is expected to ease somewhat as investors allocate more capital to things like office, data centers, and retail, according to Colliers. Speaking of data centers, the darling of 2025, with demand significantly outpacing supply, Deloitte called the sector a clear bright spot in the U.S. commercial real estate landscape. It pointed to 9 major global markets where 100% of the new construction pipeline is already fully pre-leased. Data centers, however, do face some headwinds in financing, grid capacity, which we talk about a lot, zoning, and even local politics. Now, for the outlook on more sectors as well as property technology, PropTech, make sure you're signed up for the CNBC Property Play newsletter. That's cnbc.com/property play. It's out, guys.
I mean, it's a reminder, Diana, that a lot of these real estate companies are now entwined with the AI trade. And if there is a sort of bubble that bursts or a boom that busts, they're going down with it.
Yeah, absolutely. It's amazing how much, we have a section called Prop Tech Talk in the newsletter, and the number of pitches I get for that specific section is just off the charts. Property technology, as well as the data just informing investors about commercial real estate, has really just gone kind of, as you said, off the charts with AI. And it is going to be reliant on that. It's not just data centers. It's operations facilities with every type of building out there. And again, the capital coming into real estate, that it's being told what to do by AI.